I think there's a lot of reasons to think natural gas could be a really, really good place to be. Maybe even better than platinum. It's not as much. There's not as many moving parts with natural gas.
Steve, Joe, gentlemen, let's continue the conversation from yesterday where we were talking about the potential, the possibility of a bull market in commodities, and in particular platinum, palladium, and natural gas. But let's talk platinum in particular. Joe, you were pointing out before we started to record that prices have been subdued for about 10 years on platinum. So how does that factor in? What's the potential here for this potential bull market in commodities?
Well, I think that that what I said at the very beginning of my piece my commentary over the weekend, which is that low prices cure low prices, is starting to happen. And what that means is that when prices are low, supply tends to contract, and it contracts because the price is not high enough. Obviously, there are going to be, in the case of platinum or copper or a metal where there's mining involved, there's going to be mines that are only profitable above a certain level. And so we know, for instance, that platinum production, for instance, in South Africa is down about 500,000 ounces from where it normally was prior to all this. And we see other mines scheduled for closures. A platinum mine owned by Impala in Canada that's scheduled for shutdown. It's going to take another 280,000 ounces off the market. So with look, the yearly usage is around 18 million. So I mean, 500,000, 280,000 doesn't sound like much, but we've seen some, the platinum market has been operating in a deficit for a long time. Point being that the supply has not kept up with demand on an annual basis. Of course, obviously we had a lot of inventory, and some of that was in the investment space. And of course, look, you know how investors are. If the thing doesn't go anywhere, they're going to sell it eventually. They're going to throw in the towel and say, "I'm done." Well, I think you can probably say that most people have given up on platinum and palladium for sure, because the number of ounces held in ETFs has just plunged. You're talking about going from 1.5 million ounces of demand on investment demand down to 400,000. So anyway, the point is that low prices are doing exactly what they always do with commodities. They're taking away supply. And the question really is on the demand side. And this is something, listen, before we get too deep into this, let me just say we don't own platinum right now. We're out here talking about it. We try to be transparent about things, or have to be transparent about things. If we owned it, we would tell you, but we don't own it yet. This is part of our research process. And part of our research process is talking about it and thinking about it and reading research and writing research. That's how we invest. We have to, it's not something we just go wake up one day and go, I think we'll buy platinum. No, a lot of research goes into this. So, we're still doing our research, still doing our due diligence, but it looks to us like there's, I think, an interesting case to be made here that there's a big upside in platinum. On the demand side, we saw demand go from in automobiles. Look, 65% of platinum and palladium and rhodium, that's the three called the PGM metals. That group, platinum group metals, PGM, those metals, 65% of the demand is in automobiles for catalytic converters. So you got to really look at the automobile market and decide if the demand is going to be there. So obviously, the thing that has suppressed demand has been the rise of electric vehicles. And electric vehicles obviously have come up in the world. I mean, 10 years ago, we were hardly selling any. Now there's obviously been a rise. But it appears to me that the demand, or excuse me, the rise is leveling off. And I think there's a number of reasons for that. I think number one is that people are discovering, the more research you do, that electric vehicles are really not all that great for the environment. The batteries have to be made, and the energy that goes into charging the things up has to come from somewhere. And when you add it all up, it really doesn't, it's not that effective as a tool for efficiency on the energy usage side. The whole point here for a lot of people of buying an EV was to get rid of the tailpipe emissions, and that's fine, but you got to think about the whole equation. And when you look at that, the format that works the best by far is hybrids. And so anyway, the point is that I think the EV demand may be starting to peak a little bit. I applaud Toyota heroically, man. Toyota, when all this stuff was going on, remember during the Biden administration, gosh, the Biden administration was essentially forcing Detroit to shift to electric vehicles. Man, they gave them all kinds of incentives and sticks and carrots to say you're going to build EVs. And these companies, GM, Ford, Chrysler, all these companies built a ton spent a ton of money changing over so they could build these electric vehicles. Well, nobody wants the damn things. People don't like them. There's problems with them. Where you go on a trip? Where are you going to recharge the thing? There's not public stations to recharge the things, which, by the way, a lot of people don't know this. Electric vehicles actually were the most popular type of car, automobile, prior to the Model T. Electric vehicles were some of the first cars that were ever built in the world were electric. There was a point in the 1910s, I don't know exactly what year, but I read this stat and it kind of shocked me. A third of the taxis in New York City were electric at one point. Well, then along comes the Model T and Henry Ford, and of course Rockefeller and gasoline and oil and so forth. And Rockefeller was pretty good at working Congress, and he got a lot of tax breaks. And suddenly, oil production went through the roof, and gasoline, and suddenly Model Ts were cheap enough for everybody to buy because electric vehicles were not cheap. And there was problems with the electric vehicles. Gosh, they didn't have any place to charge them, just like it is today. Here we are 100 years later, over 100 years later, we still got the same problems. I think they might be easier to solve these days. But the point is that the idea that electric vehicles are going to take over the world, I think, is just probably not true. I suspect that you're going to see a lot more people driving hybrids because they are by far the better choice. You can look at the amount of power it takes to drive in a hybrid is a lot different than it is for an ICE car, internal combustion engine, or for and I've got some stats here. I just have to get to my screen here. I got some stats on this. This is kind of interesting. This blows my mind. Let's see here. If you take a look at a hybrid, it uses 63 kilowatt hours to drive 100 miles. And an ICE car, an internal combustion engine car, takes 98. An electric car is even worse. The electric car, actually, let's do it this way. A hybrid or a car carries its occupants 56 miles for 100 kilowatt hours. That's 40% farther than an internal combustion engine and 65% further than an EV that's charged from a power plant using natural gas, and 220% farther than an EV that's charged from a power plant using renewables. Now, that's really interesting too. Why would the renewables be even higher? Well, renewables are not as simple as it sounds. Solar panels take a lot of energy to build. Anyway, the point is the hybrids are by far the most efficient choice. And so when you start looking at that, if emission standards are rising around the world, India is imposing some new emission standards. Europe's emission standards are still rising. China is imposing some new emission standards. They're going to have to reduce these emissions, and the best way to do it is to go to a hybrid. Now, look, there is a wild card here too, and everybody, it's the elephant in the room. If you're talking about this platinum and demand and so forth, that's BYD. That's the car company in China that's making these little cheap electric cars, and they just cut prices by another 35%. By the way, these things they're very cheap and they are attractive. They're well made, from what I can read. So I don't know. Maybe if they get cheap enough, maybe they will combine to reduce the usage of platinum in ICE cars. I'm not sure, and hybrids. By the way, hybrids actually take more platinum and palladium than an internal combustion engine car. The reason being is that the catalytic conversion, I said, the process in a catalytic converter works best when it's hot. Well, a hybrid car is not always, the catalytic converter is not always hot because it's not always running the engine. It's oftentimes running on the battery. And so to make up for that, they have to add more platinum and palladium. Average internal combustion engine car takes about 5 grams of platinum or palladium. And you start talking about adding on these new emission standards and you talk about hybrids, the average is probably going to start going up 8, 9, maybe even 10 grams. So Look, supply and demand. There's a lot of limitations on the supply side because the price has been low for so long, and I don't think the demand side is that constrained. In fact, I would just take this for example. In 2019, 2000, prior to COVID, um, global demand for internal combustion engine cars was about 95 million. And during COVID, it fell all the way down to 75 million. Well, it's back to 90 million. You can talk about EVs taking over, but the fact is we're selling almost as many internal combustion engine cars right now as we were in 2019. So, I don't know. We'll see how this goes. And by the way, the demand for automobiles continues to rise. There are people in this world, believe it or not, who can't afford a car. And that is starting to change as the world gets wealthier. They want cars. And so the global market for automobiles continues to rise. What piece of that is going to go into cars that require platinum and palladium? We don't know yet, but it looks like it's going to be a significant portion. So anyway, that's kind of the basic case on platinum. It includes palladium too. They're kind of interchangeable. And it's like I said, I think it's bullish. We're not, like I said, we're not done doing our research yet. We're still thinking about some things here. We have started to see the prices have started to improve. We really had kind of a breakout last week where the price of platinum and palladium both really took off. So we'll see how it goes. Like I said, if we do make change and start making some investments, we'll let everybody know.
Steve, one of the things Joe mentioned in that opening was natural gas. And I know you've been watching that as part of this potential commodities bull market.
Sure. So, yeah, one thing I would just say from the get-go in terms of how we use commodities is we will generally have an allocation that's pretty diversified, and it's not going to be a majority of any of our portfolios. But that's something most institutional investors do. Everybody who's pretty much done the historical research is aware of certain periods, including the 70s. I mean, the 70s is the big one, where on an inflation adjusted basis, stocks underperformed the Great Depression. It was pretty bad if you were just a stock investor, and real assets like commodities, real estate, they really saved you if you had a diversified portfolio. That's an extreme case, but there's a reason why we have these allocations, and in this case, we're really talking about allocations that wouldn't be huge, but would be some positions we take to kind of supplement what we're already doing in some broad-based exposure. On natural gas, I'm going to kind of reinforce something Joe said of, the cure for low prices is high, is low prices. I would actually modify that to having a bit of duration in there also. And I do have a while ago, I have some exposure with natural gas. And that's had periods of the price really kind of falling down and putting operators and financiers out of business. And it's happened enough that people are really leery, at least back when I was active in this space, about jumping back in. So I think, with natural gas, but also this goes to the point Joe was also making with platinum and to a degree palladium. If you had you've had operators having to work for a while with the thought of, prices are pretty low or they're going to get lower, the potential get lower, and they're going to put me out of business. The credit market's having to operate with this. It's generally going to take a prolonged period of higher prices before people are going to feel comfortable about investing in extra production capacity. So that's a reason why, for some of these markets, they could run for a while if they start going to the upside because people have been so burned adding capacity in the past. I would also, going to the electric car points Joe was making, all those points are completely valid. They've been valid for a while. And I think there's also some extra things that have changed. One is if what people are talking about is going to happen, there's going to be more competition for power off the grid. We're talking about reshoring manufacturing. You need cheap electricity. You need cheap power to manufacture competitively. Everybody's talking about AI and firing up data centers. Well, AI is power hungry. We've now all of a sudden, I really think that in a lot of quarters, EV is going to be looked as a competitor for power consumption, and hybrids are just much better math. I mean, I'm in California. We've already had days where they're saying, hey, don't charge your EV, or times where they say, don't charge your EV. The grid can't take it. So I think that's another reason that now there's a little impetus here to maybe get more efficient and not put even more capacity onto the grid. The other thing that has changed also is, if you take a look at a Tesla, you take a look at a Prius, the Tesla's cooler. It's just cooler, and that matters. But you know what? Nowadays, you can get Ferrari hybrid. You can get a McLaren hybrid. You can get a Corvette. Now, I don't know if you're really saving the environment when you're getting a McLaren hybrid, but they're cooler, and that matters for markets. And I really think that when all this math of like, you're going to save the planet, yeah, nice, nice. But hey, I'm in Silicon Valley, and I can tell you what they really matter. I want to look cool while I'm saving the planet, and I don't actually care too much about the math as long as I look like I'm saving the planet while I do it. And hybrids are a lot cooler now, partly because of that high-end segment, where just some of the coolest cars you can get for performance reasons of being able to combine that internal combustion engine with that electric. I mean, yeah, they're chewing through resources a lot faster. Doing close to 200 miles per hour ain't environmentally conscious, but it's cool. So, I actually do like the market for that reason a lot more. And then the other things I would just point out that we've talked about a little bit is I do think you can take a look at leading indicators like the breakout in gold. You can look at the weakness we're seeing at the dollar as potentially being leading indicators to feel more bullish about commodities and some of these markets that just really haven't gone anywhere for a while. Uh, but yeah, I think this is again, we're not investing in it. We're looking into this as a thesis, and I think it's an interesting thesis.
Joe, I'm going to give you a chance to respond to anything you want to that Steve said, because I saw you smile and chuckle as he was going through some of those things. But if you're so inclined, I want to go to that point about the demand on the grid for all of this and your background as a nuclear engineer and these new portable or smaller nuclear platforms that they're talking about and in some cases installing.
Well, first of all, I'm not a nuclear engineer. I'm an electrical engineer, but I worked with nuclear reactors in the Navy. So I do know something about nuclear reactors. These modular reactors are being put out by GE Vernova and some others too. Are They're cool, man. I mean, they really are. What they've done here, it used to be, man, building a nuclear power plant was a 10-year project. It took forever. And part of the problem was that the designs were not standardized. You had different designs, multiple different designs that had to be approved by the Nuclear Regulatory Commission and so forth. Well, now what they've done is they've standardized it. So each one of these things is exactly like the previous one, and they're modular. So you can start with 50 megawatts or whatever. I'm not sure what exactly what the sizes are, but you can start with 50 and just add. And that way, if you've got a site where you're going to put these things on, and you're planning on I don't know 500 megawatts or a terawatt or whatever it is, you don't have to do the whole damn thing before you can turn it on. You can actually do a small piece of it, turn it on, get some cash flow going, and help you finance the rest of it. And so it's just a really cool idea. And I think they will come. But listen, they're still not going to be really quick. Adding nuclear capacity is not going to be a quick fix. And that's where it comes back to this issue with natural gas. Listen, almost all the new capacity being added in electricity production right now is coming from natural gas. Coal has been obviously reduced dramatically, although I think the Trump administration is more friendly to coal, obviously, than the Biden administration was, but I'm not sure how much more they're going to get out of that. But natural gas is where everybody's going. You think about from the United States perspective, and I think Steve is right that electricity production is rising for a variety of reasons, and some of it's AI. I get that, but it's not going to be all that. It's just in general that our life is more electrified today than it has been ever. So electricity demand continues to rise and rise at a rate, by the way, that exceeds what any of the electricity producers expected. It's way above their plan, so to speak. So they're kind of playing catch up. So you think about all the places where demand on natural gas. So it is power plants, obviously. It's also demand for LNG exports. And this is a very interesting thing. I talked a little bit about this yesterday. I don't remember exactly how many we have now, but back, say, 20 years ago, the first LNG plants that were built here, they were built here to convert liquid back to gas because we were afraid we were going to have to import gas because we didn't have enough supply. Well, that obviously flipped with shale and fracking. And one of the things we're looking at, and this is something that we're actually researching right now because I don't know the answer to this. We know that natural gas is a byproduct of drilling for shale oil, but I think there's also wells out there that are drilled specifically for gas and fracked. But I don't know what the ratio is there, and I'm not sure how that's going to affect things. But look, we knew all along. Anybody that knows anything about physics knows that this shale thing had a lifetime. The question was, how long was the lifetime? The point being, there's only so much oil and gas trapped in these shale rock, and once you frack a bunch of it, it just there's nothing left. There's a finite amount of oil there. It's not the same as drilling a well in a traditional fashion where you had a production curve that peaked and then fell off very slowly. These things peak and fall off rapidly, and so you have to keep drilling these wells. And if you stop drilling the wells, you're going to stop getting natural gas. You're going to stop getting oil. And eventually, shale production is going to peak. And I frankly think it's peaked already. If that's true, and again, we got to look at the supply dynamics here of natural gas and in the fracking world. How much of it is a byproduct of oil drilling, and how much of it is wells drilled specifically for gas? And I don't know the answer to that, but I think it's important to figure that out before we start getting really crazy about it. But the point is that if fracking and shale production peaks, it's going to have an impact on natural gas supply. And if suddenly supply starts to drop off and prices start to go up, then I think there's a political problem. And there is obviously with EVs, there's a problem there too. The political problem is that natural gas now is for heat and a whole bunch of other things. People use natural gas for a lot of things here in the United States. And if the price starts to go up, it has an impact on the household budget. And listen, I have gas. My furnace is gas. So a couple of things I would point out in the natural gas. Natural gas is really, really volatile. Go back to the period from 2001 to 2008. That's the last time we had a commodity bull market when the dollar was weak. We had 1, 2, 3, 4, 5 in 7 years. We had 5 spikes of natural gas prices above $10 a barrel. And it peaked up around 15, not barrel, per foot. It's millions of cubic feet. So over $10. Right now, the price is $3.50. And since then, since the shale revolution and since the dollar started to strengthen, say 2011, we've had one spike above 10. And that came in 2022. So we don't see these spikes like we used to. But if you start spiking natural gas up to over 10, that's a problem. And I would guess that the political problem here is that President Trump is pushing hard for LNG exports. It's part of his trade negotiations. He's telling these countries, hey, you got to take more LNG from us. You got to import LNG from us. It's part of his negotiation process. Well, what happens if suddenly natural gas prices are not cheap like they are right now? That's not going to play very well politically. So I don't know. I think there's a lot of reasons to think natural gas could be a really, really good place to be. Maybe even better than platinum. It's not as much. There's not as many moving parts with natural gas. There's a lot of demand, and the supply right now is high because of fracking. If fracking starts to fail, that's not going to be good. By the way, obviously this applies to oil too, crude oil. I said yesterday I found it very interesting that OPEC Plus says they're going to increase production, and oil prices didn't fall. They've gone down already. They're in the 60s, but they didn't fall based on this new news. And I got to tell you, I have this funny feeling that oil prices are not going to stay down here. If I'm right that shale production has peaked, we're going to have a big problem down the road. And you can see oil back over $100 a barrel really easily and really quickly. So anyway, look, that's just another piece of the commodity puzzle. I think there's a lot of things lining up on the fundamental side here. We always talk about the dollar being a driving force here, and it is. A weak dollar is generally positive for commodities. But there's a fundamental side to this too, and I think it's lining up where maybe both of those things are going to work in favor of higher prices.
And hey, Bob, I just want to add one other point just to supplement what Joe's saying. Natural gas is not an easily substituted energy source because
Yeah.
it really is an ideal component to solar and wind. because when those the wind stops blowing, the sun stops shining, it's intermittent use. Natural gas is an ideal power source that you can fire up and fire down efficiently in a controlled manner to supplement your wind and your solar. So you can't really replace it with wind and solar. You actually need it to have effective use of wind and solar on the grid.
All right, guys, lots of great information. If you'd like to know more about what we think and you haven't done it already, be sure to sign up for our free newsletter.